Well, welcome to nGRND's channel, Empowering Sustainable Ownership of Natural Wealth, as we are privileged to be joined by Professor Elisa Wilson, the CEO. First and foremost, welcome.
Thank you very much, Kyle. Glad to be here.
Yeah, it's such a pleasure to get you on. And I think in this precious metal renaissance and so much going on around the sector, for newer audiences, you want to just give us a brief intro to exactly what nGRND is doing?
Yeah, it's pretty easy, really. Enrand goes out and builds relationships with the companies, and we broadly call them junior developers in the mining world. So there's tier one and junior. Tier one, really, basically all the big senior companies like the Barrick, Newmonts, and so forth. Everybody else is really a junior. And most of those juniors are the ones that hold the verified known resources of in-ground gold. We go out to those junior developers, build relationships with those companies so that we can acquire and purchase the rights for the gold that they have in the ground, but most importantly, also the alternative land use that those minerals sit on and can use those sites, those site programs for alternative land use and monetize the gold.
Yeah, appreciate the insight. I mean, how are you validating the value of the gold without digging it up?
Yeah, look, that's a fairly easy question, really. Many people would argue in the industry that there's a number of ways that we can assess the value of very early stage in situ gold. First of all, it does have to be verified under either it's basically a regulatory platform like a 43101 or another a standard called JORC or SAMREC or so forth. So it's verified independently by the mining companies, not by us. We check all that paper and make sure that it's all done appropriately. But in terms of pricing, um, there's probably a number of different ways. One is what we call an econometric resource model. Basically, it's the most qualitative or the volume-driven research that we have and the excellence in research that we have, which generally means that early stage in-ground gold is priced at about 7% of what it costs to discover it. So that in terms of USD is about 27 USD dollars per ounce, and that's up to 2024. Another example which is used is what we call enterprise value, and it's even more basic. Basically, it's the cap value of the company, the junior developer. They divide it by the ounces of gold that junior developer has in the ground, and it equates to somewhere, depending on the quality and the variety of gold and the size of the gold properties, anywhere between about $27 to $90 an ounce. But neither of those two methods take into account the actual capital cost it takes to take those resources to what we would call extraction. In other words, to build the mine, operate the cost of upgrading, and all of those sorts of things. So, another one that is probably more realistic is called total acquisition cost. And that means we look at what is the total cost if we were to take the early acquisition of the assets in the ground, add on to it everything that it's going to cost to get it out of the ground, and then divide that by the number of ounces. That approximately equals 15 to 30% of what we would call the spot price of above ground gold. An in-grounds issuer of our in-ground token, our gold token, which is the real world asset that represents the monetization value of that gold in ground, we've taken, or they've taken on our advice, that the an ultra conservative side, viewpoint. So we've said 10% of spot price, which is really good for the investor, but it also means that we risk mediate for the issuer and for us that there is any errors or miscalculations along the way. So 10% of spot price, which is on the very conservative side of what industry would say is the expected price of early stage in situ gold.
Yeah, and I imagine for a lot of newer audiences, this is definitely a bit nuanced. I mean, do you have any direct competitors and kind of what sets you apart?
Look, yes and no. So first of all, what I would say is what sets in-ground apart. What sets in-ground apart is that it's really a quite perfect storm for in-ground to enter the market. First of all, in-ground gold token, which is issued by our issuer, it's an independent licensed regulated entity that issues our in-ground gold token, is regulated. So it's moving into a real world asset space that is regulated. So it has trust and confidence and the regulatory rigor that sits in behind it, which is also applicable for professional investors and institutional investors. It also has the capacity for the gold token to be available to professional and retail investors. So it's democratized the access to gold, which has never been available before. I would also say that it is a perfect storm in the sense that mining and resources are being heavily impacted by the fact that ESG and sustainability is becoming a very important part of their model and a very costly part of their model. And so we can find an alternative way to use the land, which generates revenues from those alternative land programs, such as carbon generation, carbon credit generation, and ESG programs. Are there any direct competitors? There are other companies that are doing, for example, ETFs or digital gold, if you like, and HSBC does as a gold token. There are other attempts to tokenize in-ground resources and assets, but what they don't have is the regulatory rigor and framework. And I think that's the point that really sets us apart. And also the fact that our rigor in making sure that we verify the assets, they must only be mineral resources. We won't take estimates and mineral resource estimates. They have to be verified resources. So I would say the regulatory rigor, there'll always be competitors that have, nuanced similarities and differences to us. But I think what's really important in this question is the fact that in terms of those who would purchase the in-ground gold token, we don't actually have to create the demand for gold. We also, because it already exists, it is a traditional commodity. All we're doing is providing it, and our issuer is doing is providing it to them in a different format. So I think the mind shift that we have to make of people is not that great because, we still go out and see digital money in our accounts. There are people who are producing digital forms of gold, etc. So I think in that regard, we're entering a market with a different form of the commodity, but I don't think it's actually a direct competition. I just think there's nuanced similarities.
Yeah, and on that note, do you have clients locked in already?
We do. We've only just exited stealth mode, and we have already exceeded our 2029 ounces target, as if we like. So, in other words, the number of mineral ounces that we wanted to acquire. So, our full pipeline at the moment is looking at approximately 143 million ounces of verified resources, early situ in the ground. And we also have a number of letters of intent which are heading towards definitive agreements for approximately 1.4 million ounces of gold. And we've only been 4 days out of stealth mode. So it's been a lot of work in the build up to this to test the market and see popularity. Our chair has just come back from the biggest resources conference in Vancouver, and it's been overwhelming with the response. So yes.
So, what should investors into nGRND gold token look forward to in 2026?
Yeah, it's an exciting year. We're looking what our token generation event, which will be the issuer that issues 1 billion in-ground gold token, will happen approximately end of April in 2026. And then once that token generation event occurs, it's a single event. In-ground, as in our site programs, provides to the issuer the ounces of gold that we've procured through our site programs and relationships with the junior developers. So from April onwards, investors and those that wish to participate in the in-ground gold token and purchase it can do so from very early, probably May, within the first to second week of May. We're already in our pre-release, so we've got a pre-release of just over 35,000 in-ground gold tokens. So participants can already engage with us in the pre-release before our token generation event. And of course, as 2026 progresses, one of the most important things for us is that the site programs that we've engaged, that we've moved the monetization of the gold over to the issuer, we will also begin our feasibility programs and the development of our carbon and ESG programs, which is a separate revenue and distribution generating event, which means that those who hold in-ground gold token will have a second yield that will be developed from distributions from revenues that are built and sustained through carbon and ESG programs because of the land site alternative use programs. And, in terms of the attitude and the expectations of investors these days, whether it be professional or retail, their expectation is that investment will not cause harm to people or the planet. and this is a fairly basic sort of a figure, but for every 1 ounce of gold that we don't mine, so in other words, we avoid mining it, we actually save about 800 kilograms of carbon going into the environment. And our 2029, and this is a very powerful figure, our 2029 ounces target, if we fully tokenize and sell all of those tokens, we will completely remove all carbon that is put into the atmosphere by the entire gold supply chain 3 times over. So that's what they've got to look forward to in 2026, as well as,
Incredible.
of course, rising, the nuanced rise in price in gold as well.
Truly incredible, but we'll pass it off to the viewer. We'd love to know what you think, but consider subscribing for news and catalysts as it comes down the wire like this. Of course, we'll bring it to you here. But on that, we look forward to catching you in the next one.